Hi. Well, we're going to start today with an outrage, and I'll try to remember that I should do that with every one of these videos before I get into the market action. And the outrage today is the fact that two esteemed, quote-unquote, credible institutions are both reporting diametrically opposite data, which is not meant to be subjective, but it's meant to be objective. These entities that are supposed to measure these in this case, consumer confidence, you would expect their measures to coincide with some degree of accuracy. So I'll tell you who they are, I'll tell you what they're saying, and you can decide which is the more credible. In the one corner, we have the Conference Board, a government business think tank type entity, but it's supposed to release credible data, and they are showing that consumer confidence is at its highest level in 2015. Its highest level. The other entity is Gallup, and Gallup is showing that since January, when it was barely positive, it has fallen steadily throughout this year. You can decide which of these two is more credible, but maybe the real question is how can we trust any source if sources that we deem credible turn out not to be? So on to the market, and before I discuss that, I'll give you the line that I've been repeating ever since I started this channel a little over a month ago, which is nothing has improved. The data continues out negative. All the regional boards are reporting negative results, and I believe recession is going to be imminently declared. I think only 2 quarters of negative GDP growth. Well, if that's the criteria, who knows if we will ever have a recession, but certainly economic activity is slowing down in numerous, if not every region across the country. The one bright spot is possibly Boehner, or Boehner is resigning. Sometimes I do make a mistake and pronounce that correctly, but Boehner is going to be in office when the debt ceiling is going to be negotiated, and so on the one hand you might argue that that means it should pass effortlessly, or at least without anything more than verbal opposition. On the other hand, you could say that now that he's leaving office and isn't beholden to a political group, that perhaps he will be more conscientious. Anybody want to wager on which way that's going to go? In any case, back to the market. So as you see here, it's rallied back to the 50-day moving average. We are at the high of the range since the crash of the 24th. You can see the 24th, 25th, 26th, 27th. This is the moment of truth. Either the market will resume its downtrend from here, or perhaps the money printing is set to begin anew. There are some signs that perhaps the inside money does know something. Crude oil up $2 today, gold and silver on a tear. Is it possible that we're going to have some kind of an emergency measure, perhaps money directly to citizens? Who would vote against that? Well, those of us who never get any would, but who cares? Who cares really? It's majority rule, and the majority seems quite happy with the current state of affairs. Even though I will point out to you that it's rotten. We need as a country to manufacture things that other countries want to buy. And being the repository for the world's savings, as I believe Dick Cheney described it, savings come and go, and if it is indeed the world's savings, they can withdraw it at a whim. So I wish you well. I am hopeful that the downtrend is set to resume. We've certainly had a very healthy rally, and I believe optimism is afoot in the land once again. Which is usually a comfortable place to be short. Take care.